The shutdown caused by the pandemic saw the global economy took the elevator down in the second quarter, and now we're climbing the stairs back up. While global economies are gradually recovering and reopening, social distancing policies could be in place for an extended period. As we move through the coming months, we'll start to see a lot more differentiation between the winners and the losers, and this will provide significant opportunities for bond investors. At PIMCO, we have been adding to our credit investments over the last couple of months. We have been taking advantage of new issuance where there are significant discounts with an initial focus on higher quality issuers. The overall level of spreads on global credit is still attractive compared with what we have seen in the recent decade. In terms of the fundamentals, we actually see Asia, mostly driven by China, to be on a reasonable path for recovery. China's speed of recovery is apparent in various leading indicators. GDP was likely positive in Q2, and we see there's more room for further monetary policy easing in case it is needed. While there might be occasional small-scale outbreaks in different parts of China, authorities have the situation largely under control. Across Asia more broadly, there's also scope for greater central bank easing, and Asia as a whole benefits from the lower oil price. On the technical side, we have seen a pickup in new issuance, and deals have been priced quite attractively. One thing I want to highlight is that this year in Asia high yield, the need for refunding or refinancing is not particularly large, so the supply picture is quite favorable. The spread on Asia high yield are still quite wide, a level that we have not seen except for episodes in 2009, in 2011 during the European crisis, and earlier this year. The spread difference between Asia high yield and US high yield is also wide, so we think global asset allocators are likely to look to Asia based on the favorable fundamentals as well as attractive valuations. The opportunities lie in different sectors depending on different recovery scenarios. For example, whether we'll see a more L-shape or V-shape recovery. We try to identify sectors that could do well in both scenarios, and we are particularly positive on China Internet and China Property. The China Internet sector has been growing very rapidly, and we think this is going to be a structural story. Companies have been able to weather this period well, and in fact, have seen an increase in customer usage as travel and other activities were curtailed. The financials are very solid. China Property is a large sector that supports the macro growth of China. During more difficult times, supporting this sector will be critical for Chinese policymakers, and there is room to ease the current somewhat tight policy with relaxation on home purchase restriction, mortgages, and developer funding needs. In a V-shaped recovery, customers' income and their power to buy property would also be increased. In an L-shaped recovery, we would be looking at defensive sectors. For example, financial names which have built up good capital buffers along the way, consumer staples with a more steady demand through necessity, and utilities. In a V-shaped scenario, we'll be looking for cyclical issuers that have been more affected by the COVID-19 crisis, and that could benefit from a rebound of pent-up spending. The factors which have been driving markets over the last 3 or 4 months will likely remain intact. First, the path of the virus. Second, the responses from governments and central banks. Are they willing to deploy a lot of monetary and fiscal firepower to bridge the shutdown risk? And then we have to look at what's happening with capital markets. Do companies have access to credit? Onshore market condition in China would also be a key indicator for whether there are multiple channels for companies to continue with their funding needs. Another factor is defaults. The market has assumed quite a high level, perhaps too high, of default rates. So we'll be watching that very closely. And with the economy starting to recover, we are also watching the high frequency data to see if that momentum continues.